All right, perfect. So I first wanted to discuss a little bit, of course, what we went over throughout this week. So let's actually see. We went over the basics, and in the basics, we went over offering that fair value, seeking liquidity. Essentially, that's the institutional part of how we trade right there. Then we combined those fair value areas and that's seeking liquidity with fair value gaps in the second video of this week. And in that video, the main premise of that video is seeing how far we can retrace. So understanding which fair value gaps are more likely to hold, which fair value gaps we can actually use to trade off of. When we look to target, whether that's liquidity, whether that's a run on liquidity, doesn't really matter. We need fair value gaps to target something. So when we have established that target and fair value gaps are leading towards that target, for example, right here on the dollar, we have that high and we're quite confident we are going to reach that high. Well, that's the first part, because we're not only analysts, of course, we need to be good traders. And in order for us to be good traders, we need to actually place an entry. So we need to know how far can it actually retrace, where can we get in confidently. So that's where the fair value gaps come in as well. So that is then the second video. Then the third video, we went over again institutional market structure. And institutional market structure was already quite easy. And I say that from, of course, my perspective, it was quite easy because we already built up so much knowledge towards that video where we only had to incorporate now market structure. So it was sort of things all clicking together. And that is what I want to build on a little bit more as well, this understanding. So I wanted to start off with the dollar and go over small little details right here. We discussed on the weekly right here that this weekly fair value gap in itself is already a little bit higher probability. It's one of those pool fair value gaps where the third candle is a pool candle. And that means that it's either not going to hold or it's going to have a deeper retracement. And when we have that deeper retracement right there, that worries me a little bit that we might actually want to continue higher instead. Now, this is where it gets very interesting because on the daily, what do we see? On the daily, we do have a move lower right there, disrespecting that fair value gap because there's a lot of momentum coming into the fair value area right there with that fair value gap as well to then continue higher. Now, at that moment in time, I was also looking at lower prices potentially, and I was looking at the 4 hour right here to potentially continue lower. So I want to see lower price ideally of this 4 hour fair value gap. If we have a lot of momentum in price action, then the retracement is not going to be that big. The retracement is going to be quite small to have a sting into a fair value gap to then continue lower immediately. So what do we see here? If we pay attention to the smallest details, then we see we have a sting into this premium rate with already, I would argue, that is enough of a rejection to now continue lower. Now, if we actually want to continue lower, what should we do? Well, what are we doing right here? We are about to create a fair value gap higher right there. So this fair value gap higher right here is quite interesting to acknowledge, because if we now trade back towards that high of that first candle, we fail to create a fair value gap higher, fail to create bullish intention. Perfect. But if we do not, and we do not continue lower, and this is an up candle, or we take out this high already right there and we create a fair value gap, that all becomes now very suspicious that we might actually want to continue higher instead. So this is what we mentioned in the previous live section, actually on Thursday right there, where this taking out that high right there of that first candle rejection, that in itself is already suspicious. Where again, these overlapping defenses right there, and this is a little bit more advanced understanding, of course, but the overlapping defense, every other premium rate that we have right there is not relevant anymore. They become resistance, yes, but they become resistance as in for a potential retracement to then target higher towards the last line of defense, which we have right there. So there was the thought process here on the dollar to then eventually continue higher. Exactly what we want to see, of course. Third candle perfect to then sting into it and continue higher off that. Now, if we retrace the steps right here and we go into this 4 hour value gap where we expected lower prices, we can, inside that rejection lower, we can see 15 minutes for value gaps lower right there. We could continue lower off of as well right there. Then we might even have 5 minutes for value gaps, etc. Now, the reason I'm going into the 15-minute right here is to show you that this now creates a dominoes effect. And the dominoes effect is ideally when we already have a higher time frame fair value gap that has some kind of rejection. So what I mean with that is we have a weekly fair value gap right there. And we are reliant on this weekly fair value gap holding. It's the same for this monthly fair value gap right there. We are reliant on that monthly fair value gap holding if we want to truly continue lower. Are we reliant? No. But price, if it wants to continue lower, this monthly fair value gap should hold. The same for if price wants to continue lower, this weekly fair value gap should now hold. Above there, above this fair value gap, above that monthly fair value gap, there is no other premium array for price to now hold where we can continue lower from. So this is where that already gives us important price action. And what I mean with important price action, oftentimes during the forecast, you'll hear me mention, and once you start watching the forecast, you'll hear me mention, this is an important week, because if we do not continue lower in this particular week, then that will determine long-term price action as well. This is one of those weeks. This is one of those weeks where this will determine most likely long-term price action right here, because it creates a dominoes effect. So right here, if we want to continue lower, then it's all fractal, right? We have this for our value gap right now off that weekly value gap to continue lower off of that. Then inside that 4-hour value gap, we have that 15 minutes for value gap we can continue lower off of. And that 15 minutes for value gap, we can potentially even refine that to the 1 minute right there. Let's actually see, just for the sake of it, do we have anything here? Well, we don't necessarily. We could argue this 1 minute for value gap right there off of that 15 minutes for value gap. If that 1 minute value gap, exaggeration of course, does not hold, then what happens? The 15 minutes value gap does not hold. The 4-hour value gap right there most likely does not hold, which is also can be seen by that rejection right there, the 2-candle rejection again. And then after that 4-hour value gap does not hold, the weekly value gap is most likely not going to hold. That weekly value gap, if that's not holding, the monthly value gap is most likely not holding right there. So this right here, I mentioned it in the Discord in Ario's Thoughts. It's a Discord channel all the way at the bottom. And I mentioned the case study that I want to take some long-term positions right here for a potential long-term run essentially on the dollar right here, where this is what we can now aim for. After that, do we have anything holding price from reaching that high? Not a lot. So once we reach that high right there, ideally I want to get in before, because then we can run quite fast. That is where we can now expect fair value gaps to hold right there to then continue higher off of that again. So this is a little thought process on the dollar, etc. And what I meant with the dominoes effect is one of those weeks that is definitely quite important to understand. So when we eventually get to executions, I'll also show you how I then capitalize on those long-term positions. And as well, what is important to understand when we do get into executions, this right here is one of those weeks where you do not necessarily need to get involved. Oftentimes, it is better to sacrifice 1 week or 2 weeks or even 3 weeks of price action if you can get one clean and good week in that particular month. And that one single week, that can make your whole month, that can make your whole year even if you have one single good trading week. So oftentimes it's sacrificing time, sacrificing price action right there to then get a cleaner drawn liquidity, get cleaner trading conditions later on as well. That is quite important to understand. Now, throughout this week, we had quite interesting price action as well, which I want to go over a little bit right here. First, I want to go over the correlating pairs right there, GU and EU as well. We talked about GU as well in the institutional market structure video quite in depth. And when we do take a look at this again, we see again this fair value area. We can look at it better on the daily right here, more clear, with the intermediate term high, intermediate term low right there. Now, if we combine everything we now know, we have this fair value area right there, which we can continue higher from. We have the 2-candle rejection right there already failing to continue higher off of that. So even if the intermediate term high is not confirmed just yet, the institutional part is already suspicious. Because why are we retracing right there if we are already offering fair value right there? It doesn't make a lot of sense. So it's already suspicious. So at that moment in time, when it is suspicious, I'm just trying to get your mind to, all right, we are in quite 50-50 conditions right there. I'm not sure what it wants to do. Because if it still wants to continue higher, then we can, as sort of the last line of defense, that weekly value gap, weekly order block to continue higher off that. Where we actually saw a very nice 2-candle rejection in the form of that candle right there. So that is sort of the last line of defense. So we do not necessarily need to get involved immediately. We can again sacrifice a little bit of price action to then trade the high probability conditions afterwards. So right here, when we do not offer that fair value and we continue lower, we create a bearish fair value gap sitting right there with this order block as well. And what we see is we sting into that. We have a high close right there, and that high close is getting swept, previous day high sweep right there. That is where we see the 2 candle rejection. Perfect 2 candle rejection right there, where we continue lower. And the interesting part is we can correlate this to the dollar. So again, the further we move on, the more advanced it's also going to get. So right here, what is the earliest sign that we will now take out all the lows, that we will aim for this intermediate term low right there? Well, the early sign was already that we're not offering fair value, right? But is it truly confirmed? Well, no, it's not confirmed just yet. We can have a speculation, as in the probabilities. We can argue that the probabilities are in favor to continue lower. Yes, I can definitely see that, but I would argue it's 60-40 right there. 60% going lower, 40% still going higher. But right here, if we now look at how we can get more confident, then let's look at this price action right here. We have this 4-hour fair value gap that we are about to create right there. So if we now want to truly continue higher, then what should we do? Well, we should not have a big retracement. So a funny thing, and I happened to saw it on Twitter, etc., where a lot of people were waiting for a breaker to be traded into, for example, like that, to then continue higher off of that. And I think that is a lack of understanding how far price can truly retrace. And what I mean by that is not necessarily a wrong idea. I just think that at that moment in time, when we do that, we are now sweeping a previous day high at a previous order block right there, whilst we have a lot of momentum coming into a breaker, which we now suddenly expect to hold, whilst there's a lot of intention in price. So price is extremely bullish coming out of FOMC right there, extremely bullish. So if it truly is extremely bullish, the retracement should not be that far, because now when we retrace, we are creating an expansion phase candle right there on the 4-hour to then potentially continue lower instead. So even though we might trade into one of these breakers, one of those discount arrays right there, that still is going to have a lot of resistance. So there's not, as in the resistance coming into that. So it's going to retrace deeper into that as well. Then leading me to think, well, then that might be a sweep of the previous day high instead to continue lower. Because if the retracement is going to be deep, what are we also doing? We are, let's see, right there. We are about to fail to create a daily fair value gap right there. So on the 4-hour, what is an early sign that we get that we do not want to continue higher? This retracement. That is it. If we wanted to continue higher, this 4-hour value gap right there was simply enough to already continue higher. Everything besides that is already suspicious. So the whole retracement right there is extremely suspicious actually to now continue higher. I would want to see lower prices instead, which is of course what we saw as well. Same thing on the dollar. So this right here is a mitigation block on the 4-hour time frame, is the failure to actually create a daily fair value gap on the daily time frame. So what do we do in this scenario? Well, we can see this as resistance right there, not as higher prices anymore, because of the whole thing we saw before that, because of the whole thought process. So right now, this resistance, yes, as in what I mean with resistance is we can have a small retracement like we're seeing right there off of that. But can we see higher price off of that? That's very unlikely. That is very unlikely for that to happen. So what we can do is you can even wait for 1 candle, 2 candle rejection right there, gets taken out, no rejection higher, to then look for shorts again, where we slowly start to get into the execution month as well. Now, inside this price action, I want to go over a little bit more price action as well. So let's see. If we now go into the 1 hour or into the 50-minute, let me see which time frame was it. 50-minute or 1 hour? I'm not too certain. 50-minute right here was the 50-minute. So what I want to show you is, again, the institutional market structure. Let me get that line all the way from there. Targeting intermediate term low. You can target this low right here. And this is what we're going to eventually talk about in targets as well. You can target this low right here. But when we are about to take that low, there's no reason for price to stop below that low to then continue higher. Since there is no other higher time frame fair value gap, there is no order block right there. So it's most likely the highest probability thing for price to do is also to take out that low. So when we have an intermediate term low close to another intermediate term low, for example, then just pick the lowest one right there, because there's nothing to stop. There's just no resistance right there. So it's likely also going to take that low as well. So right here on the 15-minute, what do we see? We see this intermediate term high right there. How does that get confirmed? Well, let's look at before it actually. We have a few fair value gaps, or do we? Well, we have this fair value gap going lower right there. Never creates a new fair value gap going lower off of that. After, below this, is a 4-hour fair value gap, which we come into to then continue higher, to then take that high right there, which is also known as what we're going to work towards in the next week, context high. When we move from a fair value gap high right there, a discount rate, this is the first premium rate that we saw on the 4-hour, which is the previous 4-hour candle high right there. This is the context high. Once we sweep that context high right here, we are now creating unusual context. Unusual context is all things we're going to go over next week. And unusual context is where, well, it's the opposite of context, of normal context, where we have a normal 4-hour value gap to continue higher off that. That creates normal context. Unusual context is when we fail to create those value gaps higher. For example, right there, that moment in time. So now we see this 15-minute value gap right there lower. Do you immediately want to jump into a trade? Well, in hindsight, it's beautiful, right? In hindsight, this works out. And funny because it's essentially the same thing that we saw right there. Of course, different things, different variables going into it. But ideally, you want to wait for another fair value gap lower right there, where we see these fair value gaps going lower right there. And that is exactly what we want to eventually look to trade off of, where the intermediate term high is now confirmed, where now we have a lot of momentum actually continuing lower right there, where all these discount rates, all they do is act as resistance, but they don't act as something to push higher from. So where now this eventually, well, actually the smallest thing here, we could argue, the failure of this 15-minute fair value gap higher being created right here creates a dominoes effect to then target a monthly fair value gap. So for example, what I mean with this, because that 15-minute fair value gap is not getting created right there. What does that mean? That means that on the 4-hour, we are not holding with this 4-hour fair value gap right there, because that is where we came into it. So if we're not holding that 4-hour fair value gap, then that has its suspicions that we might want to continue lower right there. That means that we eventually do not create a daily fair value gap higher right there. That means that this weekly order block, weekly fair value gap does not hold right there. That means that we can potentially now target all of a sudden this monthly fair value gap that is sitting right there. Swing low and the fair value gap right there. So that leads for an opportunity of long-term positions. Excuse me. So right here, if we want to continue lower, then where can we now continue lower from? Well, this is where we understand the target quite well, because the target is this swing low. We can confidently say that. And potentially the monthly fair value gap right there. Now, I want to first use the swing low right there as target, because we might start to mess around a little bit before we actually deliver into that right there. So I want to first use that monthly swing low right there. Now, if we want to continue lower, can we come back into this fair value gap, for example? We can, and if we do, I would still be bearish. But do I deem that as a very high probability for us to come back into? No, based on that this candle is another expansion candle lower right there. So ideally, I want to find 4-hour fair value gaps, or even wait for a new 4-hour fair value gap lower right there to then confidently continue lower right there. Now, what you'll see a lot of times is that we will wait for high probability conditions quite long. And the thing is, if you blink, the high probability conditions are over. And what I mean by that, high probability conditions are extremely fast. When we have high probability conditions, price action delivers extremely fast. So in our execution month, that's something we're going to focus on a lot as well, because we do not want to miss those high probability conditions, of course, where this delivering towards those lows happens very fast, because price is not wasting any time anymore to get towards those lows. For liquidity reasons, for the institutional story that we've created as well, price wants to do that extremely fast. So we also want to get involved, ideally, very fast, to not miss that move. That is very important to understand as well. and eventually what we're going to work towards. So you'll get that understanding eventually. Now, I want to go over EU as well, just to show you the same fractal nature right here. If we take a look at, it's essentially the same price action as on GU. Just want to go over this 1 hour fair value gap that we had right there. And this is exactly what I meant right here, where a lot of people were waiting for this breaker right there to be tapped into to then continue higher off of that. And I can definitely see the understanding. I don't think it's necessarily a wrong understanding. I just think it's a lack of understanding in some way right there. That the big retracement is not something we would want to see at that moment in time. So where we create a huge expansion phase coming into that as well. So this acts as resistance to then continue lower instead. So right here, if we go into the 1 hour and we even go into the 1 minute right there off that 1 hour fair value gap, then we see the same thing. So the funny thing is those intermediate term highs, intermediate term lows that we talk about, they get created at premium and discount arrays. And that's key because right here, if we look at this discount array, the discount array got created, or sorry, the intermediate term low got created at the higher time frame discount array right there, where this intermediate term high got created at this 1 hour premium rate, 1 hour fair value gap sitting right there. So we're constantly ping-ponging between those premium, discount, premium, discount, premium, discount. And then from that, if we go into the lower time frame, we can navigate the lower time frame by looking at that market structure. So by looking at, all right, what are we actually doing with the intermediate term highs, intermediate term lows? So right here, if we now want to continue lower, we have the fair value gap lower right there. We confirm this intermediate term high by having this fair value gap lower right there as well, where eventually we can continue lower off of. All we need to take then into account is, all right, what are we actually doing on the time frames above us? So do we have any fair value gaps we need to take into account? We have that fair value gap, which is already had a sting into. We have this fair value gap right there that we do need to take into account as well. You might have a sting into to then continue lower off of that as well. So on the 1 minute, what do we see? We see that we can continue lower right there, where we still have a sting into that 5 minute fair value gap as well. Eventually, always respecting this fair value area right there to then continue lower sitting right there and eventually delivering towards all those lows right there. Now, when we have a lot of price action in between this intermediate term high towards that intermediate term low right there, which we are targeting, we ideally want to also use and incorporate other time frames. And the reason for that is because 1 minute fair value gaps here, for example, this one, is not strong enough. And what I mean by that is the more time goes on. So if we have a lot of 1 minute candles going lower right there, we can assume as well that right now above our head right there is a 5 minute or a 50 minute fair value gap also being created. Which one is the stronger one? The 5 minute is a stronger one than the 1 minute, but the 50 minute is even stronger than the 5 minute. We do not have 50 minutes fair value gap at that moment in time. Perfect. So we use the 5 minute instead right there. So that's also important to understand once we do get into executions. Now, let's see. I want to go over two more right here before we go over the questions and we dive into the questions. I want to go over gold a little bit right here, seeing the aftermath of what we talked about as well. So right here on the 4 hour, we mentioned the intermediate high is confirmed in the institutional market structure video, because now we have this thing into the 4 hour value gap and we have this 4 hour value gap being created off of that. So here we do not create a new 4 hour value gap off that. Now, where time eventually also comes in, it's a Friday. It's less important. If that was a Wednesday, then it would have been definitely important and it would have been suspicious. But since it's a Friday, it's not a huge deal. We can still look to continue lower. We would just want more confirmation going lower as well. Still targeting this intermediate low that we have sitting right there. Now, if we take a look at the 5 minute price action right here, what do we see? We see not the nice price action right there, to be honest. Let's see, off of that, is there something nicer on the 50 minute? There is. 50 minute right there, converts the intermediate term high, sitting right there, continues lower to target these lows eventually. And do we have anything in delivery? It's interesting. Not really. So this is where we can still look to continue lower as well, ideally with a little bit more confirmation, because we have early signs of potential sweep right there. Does not mean that anything is confirmed market structure wise, institutional wise. There's nothing confirmed just yet. But if we now want to continue higher, then this is an early sign. So we want a little bit more confirmation to continue lower again right there with more fair value gaps, for example. which is all things we're going to go over in the execution month as well. Now, last pair that I want to go over is GBP New Zealand dollar. Let's see. If we take a look right here at the monthly first. And let's do a quick top-down analysis right here of what we can understand about price action. All right, we have these lows right there that we have a good sign that we might be sweeping that. We have a failure to actually create a new fair value gap lower right there. So at this moment in time, we have a failure to create a new fair value gap, new month fair value gap going lower, which means previous month's high right there is a target. Now, the interesting part about this is these previous month's high right there, they are swing highs on a lower time frame. So if we want to see if that previous month's high will be a sweep or a run, then it's the same exact thing. Where here, if we, a couple of days, we're comfortable above that monthly high right there, previous month's high, we commonly say, well, we might want to target this next high as well right there, the next premium array. Because on the lower time frame, what are we doing? We are running this high and not sweeping it right there. Perfect. So if we now want to continue, so we don't actually have to wait for that candle close to confidently say if we are going to higher as well. Here, next target, still this previous month's high as well, and now the swing high again as well, where this candle fails to create a fair value gap higher right there. So what do we do at that exact moment? Because we now fail to create fair value gaps on both sides of the market. But what do we do have? Where this, when we failed to create that bearish fair value gap, we did not create a rejection lower. We ran highs. Where when we fail to create a bullish fair value gap, we still have a rejection right there based on candle signs with a long wick at the bottom. When we have a rejection like that, that usually means that we are coming into something on the time frame below it, like a fair value gap, like a breaker, and we are actually respecting that, which is what we're seeing right there. So this is now where we can look at high price. Let me remove some lines, getting a bit messy. Right there. So if we now want to continue higher, where can we now look to continue higher from? We have this weekly fair value gap right there. And this weekly value gap is not necessarily a bad idea, but we already have an up candle. We are already close to drawn liquidity right there. It's quite unreasonable for us to expect a retracement into this weekly value gap to then continue higher. I would argue that even makes it a little bit suspicious because I would want price to run higher right now. I would want it to be fast price action. So if we go into the daily, then what do we see? We see a similar scenario right here. And this is where it gets well, quite advanced, I would argue, because the more advanced we get in this, the more things we have to sort of take into account right here. We have this daily fair value gap sitting right there as well. And we have this high, and eventually I believe we had this daily fair value gap on the left as well as a target. And I mentioned at this moment in time, once we started coming above these highs and we had this, well, this was information, this up candle right there, we saw that we were already continuing higher towards this daily fair value gap right there. And I mentioned at that moment in time, I don't think that we are going to create a daily fair value gap right there before we actually reach this daily fair value gap right there. So what I mean by that is now we need to take into account, okay, are we actually going to create that daily fair value gap before we reach that high? Or can we already go into the 4 hour right here to find a fair value gap like this to already trade off of? So what is news doing, for example? Things we're also going to go over. What is the volatility at that moment in time? Do we have enough volatility to already continue higher? Well, right here, if we had enough volatility to already continue higher. So if we have already enough volatility to continue higher right there, this daily fair value gap is not something we want to wait for. No, we want to trade that whilst it's in the making to target this daily fair value gap and stop once we reach that. So that leads to the understanding that we can trade this 4 hour value gap to continue higher off that already. Once we reach the daily value gap, we now want to wait and indeed wait for the daily value gap. So off that 4 hour value gap, we can now go into 15-minute time frame and a 5-minute time frame, where if we take a look at this, we have an intermediate term high right there. We have an intermediate term low right there. Let's dive into the 5-minute time frame as well. On the 5-minute time frame, we see fair value gaps going higher. The short-term ranges should support the idea to actually continue higher towards this intermediate term high right there. And of course, after that, we have no real resistance anymore, so we can reach that daily fair value gap as well. So right here, what do we see? Well, we have this short-term range higher right there, which is also the intermediate term low higher right there. We retrace, we create new short-term ranges higher right there as well. And we create this new short-term range higher right there as well. So this in itself is what we can continue higher from. Where would you logically place your stop loss right now? I would argue that if you're looking at market structure right here, there's no real reason to come back towards that low right there. So we can place our stop loss right there. This is where we now have to incorporate different time frames. Because at the moment that we place this entry right there on the 15 minute, we see, where are we? We see, let's see, we have now this short-term range higher right there. 15 minute stronger than a 5 minute, of course, because it's a time frame above it. So right here, this 15 minute value gap is now also validating this order block right there. So if you were to enter off the 5 minute value gap, then ideally, see right there, you would want to cover the order block right there because we can still have a retracement into that to then still continue higher. This is already what we went over as well in a live session. So if you want to see that live session, you can also check it out. And that is where we went over it. Now, let's see. Let's go over a few of the questions right here as well. Let's see. Finding time to short the indices. It would be very nice, to be honest. It would be very nice. Although ES is I would argue, is not showing the greatest bearish signs just yet. But could be nice. Could be nice. Let's see. We won't mention any names of the breaker block cultists. Oh, yeah. Perfect. Okay, check this, please. Let me see. Yeah, I saw that, Abby. I also agree with Zeus on that one. I would expect short-term higher prices right there for that. Although it's a little bit difficult, it's difficult price action. Let's see. Oh, USDT. We'll quickly do a top-down analysis right there. Tricky thing is that we are creating a monthly fair value gap right here as well. It's quite tricky. We reach this target. So we can wait for this monthly fair value gap to be created. Third candle right there, always a little bit tricky. Then we will likely trade back into the monthly fair value gap as well, by the looks of it. Which means that we might actually want to continue lower a little bit. So we can even consolidate right here. So if I were to say, all right, I believe Zeus also mentioned something similar like that. Like gun to my head, I would say as well higher prices right here. But overall, I would want to stay out for this reason as well. In particular, the monthly fair value gap about to be created. Sitting out Monday, waiting for the daily CB on GU to be created would be the play for me. That's a really good one. It's a really good one. And that's already a quite advanced understanding as well. And that's exactly what I would also want to do. So ideally, what I would want to do is a daily value gap to be created. So a daily value gap, ideally first candle or the third candle, should be a consolidation for to then sting into, to then continue lower off that. That would be an ideal scenario for me right there as well. Let's see. How would you get involved on GP New Zealand dollar as it came into the weekly value gap before coming into the 4-hour value gap? Okay. Yeah, that's a good one. Yeah, that's even waiting for a little bit more confirmation right there. GBP New Zealand dollar. Let's see. Right there, the weekly value gap as well. Yeah, even waiting for a little bit more confirmation in itself. To then target the next daily value gap higher, if that makes sense. Which I do believe we had quite a lot of confirmation already, because we had actually we haven't gone over this just yet in spring enrollment, but we had the 5-minute ST plus re. So we had quite a lot of confirmation already. Let's see. When we sting / sweep into a 4-hour discount fair value gap for the first time, price will target the opposing premium high. I sometimes interpret bad news on the economic calendar and seems like bad news doesn't matter and price will just run to the premium rate. The question I have is, does news even matter except providing volatility time, allowing it to run to the premium rate? You mentioned that it's probably, but if bad news doesn't matter, isn't it just price action doing what it tends to do? Yeah, it's a really good question. And it's a very funny thought process because I've also been there. I think we've all been there where, I don't know, for me, I came to the conclusion news, short term, long term, it can be relevant, bad news or good news. But short term, the outcome doesn't matter. It's going to do whatever price action is intended to do right there. So news, the way I see it, is what's already intended to happen based on price action. It's just going to speed things up. It's just going to do it a little bit faster. So in that case, it only, for me, is only relevant for volatility wise. If I paid attention to the economic calendar and the actual outcome, I did that. I have done that as well in the past, but I tend to get lost because then I start to see, but we have bad news. Why are we moving higher, for example? And then I do not trade anymore what I see in the charts, which is arguably the more important thing. So yeah, it's a good question. Really good question. See, in the basics video, you showed an example of mitigation block versus order block in fair value areas. Crude oil, 27th of February, 1 hour time frame. In this example, price offered fair value, but the intermediate term high and bearish order flow were already confirmed. So we might expect seeking liquidity, right? Let's see. 27th of February. 27th of February, right there. 27th of February. Yeah, you're right. You are right, indeed. Correct. 100%. So an example of maybe. Yeah, exactly. No, you're right. And at this moment in time, the only place we can still continue higher from is the 4 hour right there. So it's very similar to GU that we had actually at that moment in time, where the weekly right here is the only place that we can still continue higher from right there. So if you were to wait for a little bit more extra confirmation, where the daily right there was the extra confirmation that we actually wanted to continue lower right here, the candle signs, the 4 hour, etc. If we applied the same to the crude oil right here on the 1 hour, then initially we could expect lower prices right there off of this intermediate high confirm, potential sweep as well. We still have to take into account if we now want to continue higher, then the only place where we can still continue higher from is right there. So going over the same sort of price action right here is on the 1 hour, for example. If we now want to continue lower, then we should have continued lower off of that. Then it becomes a lower time frame candle sign story, where here on the 15-minute or even on the 5-minute, we have to see, all right, what are we actually doing right there? Are we continuing lower? Are we continuing higher, etc.? If that makes sense. But you're right. 100%. As in that video, you said that if the dollar is 50-50, ignore all US dollar pairs. So it's the same for crypto, that if Bitcoin is 50-50, ignore all pairs. I would argue yes. Yes, definitely. I would argue yes. If Bitcoin is 50-50, then it's better to just stay out and wait for Bitcoin. Bitcoin acts like the dollar for other crypto pairs, for sure. It's a good one. Could you go over the tricky third candle a little bit in relation to different time frames and how it affects fair values holding on lower time frame? For sure. So let's break that down actually. Let me find a good example that I can go over. Let's see. Is crude oil actually a good example right here? Are we creating? Oh, well, crude oil is actually a good example, since we are creating a weekly VWAP right there. So let's look at this. We have this weekly fair gap in the making. So we are trading a third candle of a potential fair value gap in the making. We already know if we want to continue higher off this weekly fair gap that's in the making, the third candle can either expand, can consolidate, can be a pull, so can be push, pull, can be balance right there. So that also leads to an understanding. Well, that third candle, if we want to trade inside that third candle, that's a little bit tricky because we're not too sure on what it's actually going to do. So that's where we have to be very aware of candle signs on the time frames below the weekly right here. So keep in mind that we are trading this third candle. We are not trading anything else. We are trading that third candle at that moment in time. So that third candle can again do anything it wants to do. So right here on crude oil, I had as initial target throughout the week that high right there. Now, what do we see? We continue higher quite easily. So we can assume that at the beginning of the week, this might actually become an expansion right there. Because when we expect higher prices at that moment in time, we have again three options, right? On that a third weekly candle. We can consolidate, we can pull, or we can already push higher. So the only option we have right there, if we want to see higher price, is that we rely on one of the three probabilities, which is 33% essentially, that is going to be an up candle, that is going to be a breakaway gap, that is going to be an expansion already, a push candle. So that leaves us 33%, essentially, that we actually already want to continue higher, which is already lower probability. The probabilities are not in our favor at that moment in time. But we can get more probabilities in our favor if we pay attention to candle signs. So right here, we are close to this draw on liquidity right there. Now on the 1 hour, if I remember correctly, we were already trying to push higher. And since we did not push higher, that was already extremely suspicious. So as soon as one of these fair value gaps, and I believe it was 50 minutes, I'm not sure. I was looking at this price action right here, right there. As soon as this fails right there, even though we have daily value gap as well in the making. So again, another third candle that's in the making right there. As soon as we do not get perfect price action, so we do not have the perfect exact signs based on candle signs, 2 candle rejection right there, that we do want to continue higher, which happens, I would argue, at this moment in time, because this right here is where the 2 candle rejection is essentially failing. So even though we get a move higher afterwards, the 2 candle rejection already failed. So it's quite suspicious. So right here, when we do not have that picture perfect price action to continue higher anymore, I want to stay out, because now I see, all right, we have a daily value gap in the making as well. We have a weekly value gap in the making right there as well. So that is becoming tricky because we're not too sure on what that third candle wants to do. So essentially what that is if we expect, or we are trading a third candle, the reason why we want to see perfect price action on a lower time frame is because we are expecting that candle to be a push candle, to be a breakaway gap, essentially. So for that to be a breakaway gap, lower time frame fair value gaps are already going to hold to then continue higher, because that is what eventually creates a breakaway gap right there. That's where we have to go into the low time frame. Hopefully that makes a bit more sense. Let me know if there's another question on that as well. It's a good question. Let's see. I was married to the idea of Russell reaching the weekly high on Thursday, but I see now that if I watch the candle signs, the marriage to the idea could create sadness. Yeah, to be honest, I've also been there. And I would argue the same right here, that I've also married that bias a little bit right there. Where definitely I could also see it continue high right there. It was quite tricky price action right here, especially after not reaching that high. So candle signs right here exactly tells us the idea that it might not want to continue high right there. It's a good one. As there are 99% of Forex traders here, all the focus is on Forex, which I agree. It should be, but can we have some videos on crypto as well? Some live session on it? Is that possible? For sure. 100%. And yeah, like Lutfist says, essentially nothing changed on crypto. So I've gotten that question before as well, where it's like, can we go more over crypto? And I for sure agree, 100%, but nothing changes. It's the exact same thing. So whatever you're seeing in that particular chart, the same thing applies. And the filtering process is also the same thing. It's just news is a little bit different, but we can for sure do that. I agree with that idea as well. Let's see. If a bullish fair value area is failing, when price is now seeking liquidity moving towards the low of the fair value area, is there a general rule of thumb for price regarding the short-term range lows inside the fair value area that now are the target? The ideal scenario is for price to be running all of them correct. Also, the short-term ranges lows could act as resistance to send price to a premium rate, of course, a bearish overflow to then continue lower again. The only important thing is there is to be aware and monitoring that the retracement doesn't turn into confirmed sweep. Perfect. Yeah, you mentioned it really good. And it reminds me of the example we had earlier this week, I believe, which was on NASDAQ at this moment in time. Right there on the 1 minute time frame. We had this fair value area right there. This one. I believe it was this one. Correct me if I'm wrong. I believe it was this one where I also mentioned these lows and exactly what we had to take into account. So to get into a little bit more detail right there, how can we know that this is not going to be a sweep to actually continue higher? Well, that's where we then want to use candle signs, even for this low as well, because sometimes that will happen, right? And we don't want to wait for every time a new fair value gap, because then we're just endlessly confirming. But what we can do is right here, 2 candle rejection, which is, I can't wait to dive into that, to be honest, because I'm very excited for that. In the execution month, 2 candle rejection, and even when this new expansion phase right there, not even the fair value gap, expansion phase is being created. That in itself can already be an entry right there, or two candle rejection, whatever your personal preference is right there. So that is how we can go over that as well. Two candle signs is awesome. Yeah, I really like it as well. I love it. I love it. I've been entering a lot with it as well. I can't wait to share that. I like it. I like it a lot. It's a good question, Ellie, and you said it perfectly. You said it perfectly. When we have some live session on it, there are things which we get to know more in respect to crypto. Very true. Very true. For example, crypto, well, probably has a lot of different characteristics as well, as in the way it moves, the way it correlates to news, etc. So that will be very interesting to look at crypto as well. For sure, for sure. We can do that. I was calling 5 minutes candles the other day, paper trading, and whoa, that was fun. Yeah, it's like, yeah. There's so many possibilities with it as well. Because even on the daily, you can just simply scalp the daily, which sounds quite crazy. But if you know where the next daily candle most likely is going to go, so for example, right here on the daily time frame, the next candle is most likely, the closest thing is going to reach that previous candle low right there. So even just a scalp, one of the crazy scalps right here, or with that as target, to then even go into the 1 minute time frame to find a 1 minute fair value gap, which has a supporting the ID, 1 minute structure, 1 minute fair value areas to hold that. Yeah, it's crazy. There's so many possibilities with this. It's very interesting. I like it a lot. Especially when conforming whether to execute it or not, it provides more confidence to two candle signs. 100% agree. For sure, for sure. For sure, for sure. All right. Let's see if we have any more questions. Sorry, AG. I missed that. Sorry, my bad. My bad. Let's see. In institutional market structure, you said when price takes out an intermediate high, intermediate low, you expect a deep retracement. And if so, what about the fair value gap pull, push, and balance theory? Let's see. In the institutional market structure, you said when price takes out an intermediate high, intermediate low, you expect a deep retracement. If so, what about the fair value gap pull, push, and balance theory? That's a good one. So right here, when I say deeper retracement, the deeper retracement, what I meant at that moment in time is also just the fair value area. So right here, for example, when we create this fair value area right there, I'm not necessarily expecting a deeper retracement into, again, these order blocks to then continue higher. No, I'm expecting a deeper retracement into the fair value area right there. So ideally, I want these candles to be sort of consolidations right there to then continue higher off of that fair value gap right there. So if it is a deeper retracement like this again, this candle, where we now create a fair value gap to continue higher off that, that would be a pull candle. Where right now I would expect, all right, that is extremely suspicious to actually continue lower instead. Because now we are not offering that fair value right there. And we're having that pull candle, etc. So that is what I meant with it, if that makes sense. It's a good question as well. Let's see. All right. The ST pattern is easier to spot with bullish price action. It doesn't seem as clear with bearish price action. Is there a common pattern for bearish patterns engulfing candles? It's quite funny. It could be market conditions. It could also be a personal preference, because I have usually when people start trading, they can spot either bullish price action very well or bearish price action very well. Where they actually, when people start trading, it benefits them to inverse the chart right here, to actually get used to seeing the other side of the market as well, which could also be something like that. But it could also be market conditions, for sure, for sure. If there's a bullish ST easier than a bearish ST, it could just indicate that we have bullish price action, more bullish price action. Regarding the two candle rejection from a higher time frame fair value gap and going into one time frame below that, and predicting if it will continue lower into the fair value area. If an entry pattern forms indicating it wants to trade into the fair value area, but it does not, is that low probability like it did on US dollar JPY 4 hour fair value gap on Thursday? Let's see. Regarding the two candle rejection from a high time frame fair value gap. Let me grab US dollar JPY as well. Going into one time frame below that. Let me see. Let me see. I'm not 100% sure on what you mean. It's quite hard to visually understand it without seeing a chart. Let me see, this 4-hour value gap, right? This 4-hour value gap right there on Thursday. Yes, this 4-hour value gap right there. So is it going to one surf below and no predicting? If an entry pattern formed indicating that it wants to trade into fair value, but it does not, is that lower probability? When we sweep this high, for example, or what is it? 2 consecutive downgrades on 1 hour. Okay. Okay, yeah. Okay, I get it. Yeah, that is lower probability. Yes, it actually is. And again, the entry pattern might still form to then continue higher, which it might still play out, right? But we have to take this into account from probability standpoint. So when we have those probabilities and the highest probability thing, or well, the highest probability thing for price to do right there, or what we want to see, is when we only have 2 candles right there rejecting to then continue higher, because that simply shows that there's a lot of bullish intention. So here, when we create this 1 hour value going lower right there, we mess around a lot right there, then yeah, that is lower probability. That is definitely a little bit suspicious overall. Yes, 100%. That's a good one to use actually. That's a good spot actually. That's really nice. Probably would look like STs on the 5-minute getting violated. So it's that loyalty test theory all over again. Exactly. So it's very funny because right here, if we what is it? If we go over previous videos, I always mention if one 5-minute ST fails, then that's quite suspicious, because that shows that price is not really willing to move higher. Which that 5-minute ST on the lower time frame, is a 5-minute ST on the higher time frame. It's 2 candle rejection to continue higher. That's a good one. Yeah, I remember from like enrollment 2-3 way back. Yeah, exactly. It's I think that was they're not on this current website. They're still on the previous website, but that's when we mentioned this 5-minute STs, which is essentially just 2 candle rejection. Very funny. If we are close to drawn liquidity, usually we are more likely to expand from the flood. Exactly. 100%. So we likely are not going to have the bigger retracement. The bigger retracement usually happens somewhere 50% in the range. What is the simplest way to understand the loyalty test? The simplest way to understand the loyalty test is 2 fair value gaps, a bullish and a bearish fair value gap. That's the easiest way for a loyalty test essentially to happen. So what I mean by that is this bullish fair value gap right there. A loyalty test is almost like being very naive, looking at fair value gaps and thinking every fair value gap will hold right there. So right here, if a bullish fair value gap we have right there, this fair value gap should hold, and holding meaning it should now create a new fair value gap higher right there. If that does not happen, okay, well then the bearish fair value gap can also hold right there. Perfect. Then the bearish fair value gap can trade back into and can continue lower. So at this moment in time, this bearish fair value gap holds right there. Now, once we have that bearish fair value gap not holding, so if we take a look, can we find an example? Let's see. Let me find a good example. I want a good example. Let's see. Yeah, here we have one. Do we have one? Somewhat. We have somewhat of an example. It's not the best example. Let me go over the dollar. Let me see. Yeah, this is a good example. So right here on the 4 hour right there, we have this fair value gap higher. All right, we expect that fair value gap to hold right there to continue higher. Without any of our understanding, we just expect that 4 hour fair value gap to hold there. That creates a loyalty test essentially. Then if that does not hold, all right, well that's nothing big. That's fine. Then this 4 hour fair value gap right there can hold and create a new 4 hour fair value gap lower right there. Now, if that does not hold, this right here now becomes CK short conditions, which is essentially also a loyalty test. So every 4 hour fair value gap or every fair value gap in itself that we have after that is extremely suspicious. And what I mean by that is because the loyalty test is, all right, well, the fair value gaps have not been loyal to us. They have not been holding. So how do we expect fair value gaps now to all of a sudden be trusted again? We can't trust them. So we need a fair value gap essentially to hold before we can actually trust them again, if that makes sense. That is, maybe it could be simpler, but that is essentially the loyalty test. Yeah, fool me once, shame on you. Fool me twice, shame on me. So 2 times fair value gaps in a row, not holding or pushing. Exactly. That's a good one. Yeah. All right, I am going to end it here as well.